Hello, fellow traders. 'Tis I, the Rumpled One. It's Friday, January the 18th, the year 2019. Let's talk trading. Weekly wrap up. So, first question for this week is, did you use your money and risk management properly on each and every trade? Okay, I've switched the order of some of these screens around. Weekly gap all filled. So it's Friday. So for that Monday open next week, question is, are you going to trade these weekly gaps or not? That's up to you. I can't trade them for you. But as you've been following, you see how these things fill. They're just pips that they're just handing out. So whether or not you want to take them, that's up to you. We're now going to look at the yearly here. You can see we're still below the yearly open, 76 pips. You can see we had a little turn trade here. It wasn't off the bottom like this one, but we had a turn trade, red-green, and you see it's followed and followed through and on with the continuation. So it's just something else just to be aware of. You can see here the turn trade, if you just okay, why is this doing this? Right here, you put that at the top. So right here, your long level was at about 39.40, and then you just take the trade. Basically, it's an upper wick zone breakout. And here we're looking at the first day of the week. This is the opening range for the week, the first day, and you can see what's happened here, where we had a breakout the second day, we had a breakout the fourth day, and a breakout the fifth day to the upside, and then the downside we had breakouts on the second, third day, and just a tiny breakout there with a rapid reversal yesterday. Once again, horizontal lines, simple trades, trading with candle color at the line. If you employ your money management, you can see that you can once again be profitable, okay? And if you take a look here, you can see price shot up through Monday's high, but then came right down, just about touched it, and reversed right off of it. And you can see here where the yearly range is pretty high right now because of that first two crazy days, but we're 119 pips off, 120 pips now off the high, and 612 pips off the low. Once again, we're under the opens of the last 12 months. And you see here, we're under the ranges of the previous 11 months. We're still in this month's range. We haven't broke the range of the first day, that is, first day of the month. We're still within that range. Inside bars, I had an email from a trader that said he just really likes trading inside bars, and he's pretty much, that's what he's going to stick with. And you can see 2 days ago we had an inside bar, and those breaks paid off. We had an inside bar for this week. You see we're still in that. Last week was an inside bar, and we pretty much stayed within the inside bar. So look for a breakout to the north at 2507 and to the south at 2339. And I mean, you guys watching the charts, if you don't have my dashboard, you can just look at this every day and you can see where the opportunities are. The opportunities are the ones in gray, because that means they're still inside the inside bar. For example here, dollar Canadian. So you can just pull up your own chart. You know, 2 days ago you had an inside bar. Look for the highs and the lows, and then you can take advantage of those on your own. Range, slow Friday. We've got what, 6 over 100. Euro yen kind of an anemic 74. But we did have that break above the high, good for about 30 pips. So once again, simple horizontal line trades, just trading price action. And earlier in the week, I mentioned range, and nobody asked me any questions on it, but I wanted to go over a couple other things just to make sure you guys understood something. I mentioned that the range is the high minus the low, but I like to divide the range up from high minus the open and the open minus the low. So you get two pieces, because when price is moving, it's going to be either above or below its daily open. Well, if you know what the range is, then you know, if you know high minus open and open minus low, then you know, well, how much farther can this go? So for example, if we look over here, we know the range here on daily. Over the last 100 days, 45% was over 100, okay? Now, between 70 and 79, it was only 13%. But you can see here there's more percentages above 70 than below. But you look at the current range right now. Current range is 74. Oh, and I popped out some old indicators here, just in case you're interested. If you want to see what I've got up here, I've got the 2014 frequency distribution of the range, 2013 range gauge, and just the multimeter candle color there. So that's what I've got showing. So right here in the range gauge, you see here's the maximum range over the last 100 days, the minimum range. So if you take these pieces apart, meaning high minus open and open minus low, you know we've got 74 pip range already. So you know there's probably not much of a chance for it to go up. But let's go back. Before price broke the previous day, what was that range? That range right there was about 43 pips, I think. Let me pull that line again. Yeah, about 43 pips. So we know the range is usually 70 or more. So when you took that breakout, you know you had a good opportunity of maybe picking up about 30 pips. Now, if you look here, high minus open, how many times is it greater than 30 pips? Well, you can see here, below 30 pips, you've got 18 plus 14 is 32. So 68% of the time over the last 100 days, high minus open was greater than 29. It was 30 or more. So there was an opportunity right there based on statistics saying, hey, I got a good chance to pick up pips. So I hope you understand that and see how you can use these frequency distributions and looking at the range and looking at what kind of opportunities you have of making pips. Now, if you look right here, if you were taking this breakout, you would see that you would really, because from here to here, open, you already had 100 and some pips. So you had about a 9% chance of it increasing. So taking this breakout, after prices traveled all this length, you're going to say, well, I better just grab, a handful or two and see what happens and make sure that I don't let price reverse on me. On the other hand, you can see here on the next day when price hit, you only had 20 pips. So you say, hey, I've got a lot more. There's a lot more gas in the tank. I mean, that may seem obvious in hindsight, but when you, once again, rather than think of the whole range, look at the range high minus open and open minus low, because that's you're only going one direction. So if you're going up, then you want to look at this. If you're going to the short side or down, then you want to look down here to see how much gas is there possibly left in their tank. Now, what this average minus low or average plus low and max plus low, we've got a bull candle, in this case white or green. And so what we're saying is you take the low and then you put the average range on it, and that's your target right there. Okay, your average plus the low. And then you've got your max plus the low. Because you can see here we've got an average range of 104 pips. So that was the target. And that's how this indicator works. Now, if this candle were a bear candle, it would be high minus the average, and then the high minus the max. So once again, to see the potential of gas in the tank. So that's how those two indicators work, and how you can use the range along the frequency distribution of the range along with this frequency distribution of high minus open and open minus low to really pinpoint your trading. Rat zone, I'll just show you here. Yeah, green rats, red rats. There were pips to be made. Buy zone, as usual, we had to pivot inside the short, so there really wasn't much of a bias there. And then you can see we took a buy here. A pro trader, seasoned trader, veteran trader may have taken a buy there and picked up off of the bounce. Because if you remember, where did it bounce? Wasn't it off of the high of day one of the week? Just go through here, looking at the pivots. We took out the pivot and then took off. And you can see we still only have these two missed pivots for this year, two missed pivots last year, and we're floating in between, wondering if we'll take out those pivots anytime soon. I wouldn't bank on it, but anything can happen. Price action, once again, candle color at the line. Wick zone, in and out as usual. Trading horizontal trades at the line, once again with candle color. You can see here on the tick chart, we had the ask get below the peak of the bid, and you can see price has gone down about 0.67 pips on that chart. I wanted to show you guys this Einstein line. Opened this chart up last night, or actually earlier this morning, but I had it open last night too. But here's where I placed the Einstein lines, and you can see here once again price has to range, and there's a couple of handfuls of pips, and there was a nice one there, nice one here, and a nice spike here, and that's it. It's not difficult at all. So that wraps up the week. I hope my little lessons on range help you with trading in the future, because remember, it's not what you trade, it's how you trade it. So have a pleasant weekend. Pour over your charts, set up your trades for next week so you can come back and drain the banks.